Everybody has losses from time to time, sometimes even big ones. This is true in general for many facets of life. Not just the trading sector. Have you ever placed a wager on which you are 100% certain you will win? But you lose it. You reflect on your actions for a while. Identify any mistakes that may have been avoided, and plan your next assault. Since we cannot quantify success if we do not experience any losses, losing is simply a stage of winning. In this video, we will talk about some ways for how to deal with loss in cryptocurrency. Before starting, don't forget to like and subscribe to our channel for more future updates. So let's start. Winners were losers at some point. Because he was too smart for ordinary schools. Albert Einstein struggled with attending them. Look at what Michael Jordan has accomplished. In the NBA, despite not being selected first overall in the 1984 draft but rather the third option. Millions of dollars are made each day by Alibaba.com owner, Jack Ma. He didn't just suddenly start one of the most successful online stores overnight. The process was laborious but fruitful. Winners have put a lot of effort into becoming heavy in their respective fields after being losers at one point. These two individuals have accomplished far more than anyone could in a single lifetime. Losing is a necessary part of success, and history contains innumerable examples of people using their failures as learning opportunities to turn the tables and succeed in their endeavors. Plan the future. Instead of getting married to the coin you just read about, marry the person you love. The largest error people make is marrying their coin and refusing to let go. We humans naturally have a capacity for emotional bonding. For this reason, if we want to succeed in the realm of trading, we must turn this off. Before you even start acting, make a plan for the future. For those who are impulsive and haphazard, planning may be difficult, but when it comes to trading, it is a requirement that must be respected. Wash, rinse, and repeat. Plan ahead without hesitation. Plan ahead. Doing so will benefit you in the long run because it helps to reduce losses. Many people today assert that the world of trading is totally arbitrary and that your actions should be adaptable to what is happening in the market. This is somewhat true because your adaptability and resilience are big benefits in this industry. However, as was already mentioned, trading is a business. So you need get practice arranging your entry and exit points. Professional traders succeed because they understand how to control risk and generate greater earnings than a beginner trader. People frequently mistakenly believe that professional traders never lose money. The truth is that they also lose a lot, but they know how to handle it. And at the end of the day, their profit margin still outweighs their losses. The ultimate source for every trading beginner. You must ensure that you have the necessary information and abilities to prevent further losses if you want to ensure that you won't ever experience such a devastating loss again. There is undoubtedly a way to trade cryptocurrencies for profit. Even for really high profit. As you are aware, but you must have a thorough understanding of how it operates. What sets professionals apart from the general public? There are a lot of ebooks available that offer the important knowledge about successful cryptocurrency trading in a very effective manner. People that study these books and consistently attempt to learn from them are able to protect their capital in each and every trade they do, while also making the most of their profitable trades. When you consider the potential cryptocurrency benefits, these incredible pieces of entertainment are absolutely worth the very cheap cost. 5 things to do when cryptocurrencies plummet. Scared by a plunge or thrilled at the prospect of buying in cheaper? Either way. Here are 5 things that you need to do when cryptocurrency prices crumble. Number 1. Stay calm. You must maintain composure whether you want to sell your cryptocurrencies or take advantage of a drop in price to buy more. Making impulsive decisions, particularly while trading, almost never turns out well. Therefore, you should think about why you are trading cryptocurrency before you panic and rush into the market. Do you invest because you think there will be a long-term profit opportunity? Or are you here to engage in short-term trading to earn a quick buck? Your decision-making process can be aided by knowing the answers to these questions. You should operate in accordance with your own objectives in both scenarios. Number 2. Assess the situation. Are Bitcoin and other cryptocurrencies trading prices influenced by news? It's possible that fundamental news, rather than just price movement or rumors, is what has changed the market's mood. Prices will be harmed by real developments in 2021. given that the country had already outlawed cryptocurrency exchanges in 2017, but had left open the possibility of people still being able to acquire cryptocurrencies. China's decision to restrict financial institutions from offering services linked to cryptocurrencies constituted an additional crackdown. The Federal Reserve then made the decision to decrease the amount of liquidity in the financial system late in 2021. And many cryptocurrencies experienced a major decline far into 2022. These actions have dealt the developing market, which had been benefiting from significant capital inflows, further serious blows. Number 3. Remember that volatility is the name of the game. Cryptocurrency is inherently erratic. Cryptocurrencies have no cash flow, therefore traders must rely on shifts in mood to determine the price. As a result, the market may fluctuate between extremes of optimism, as it did in the beginning of 2021, and dismal despair, as it did a few months later. While the reduction in monetary stimulus at the end of 2021 and the beginning of 2022 drove pessimism, the uproar surrounding the Coinbase IPO in 2021 contributed to the positive feeling toward cryptocurrencies. Therefore, the market is driven by trader emotions when an asset is driven by sentiment. That also applies to stocks, but they may also have a steady stream of increasing cash flows from the corporation that issued them, which would help push them upward. Number 4. Evaluate the future. Examine the potential outcomes of the fundamental position for cryptocurrency in light of recent events. Will countries enforce it more strictly? Will they promote its widespread adoption? Will new rules benefit or harm the market for cryptocurrencies? What else could influence the market? Is China's decision to outlaw cryptocurrency a sign of things to come? Maybe. The concept of outlawing cryptocurrencies had been considered by India, and the Russian central bank has also expressed resistance. But rather than openly banning cryptocurrency, other nations, notably the United States, are looking into how to regulate it. The fact that crypto is utilized in ransomware attacks and other illegal activity doesn't help. Therefore, it's not impossible that the crypto industry's utopian ideas are simply legislated out of existence. The political ramifications are only one aspect of their future, of course. Number 5. Determine how to act. After you've calmed down and evaluated the issue and what it means going forward, you should think about what to do. Are the threats actually hidden opportunities? If you think about it that way, you might want to hang on to your position, or use a drop in the price to make additional investments. Are there any chances that the hazards may linger or worsen? If so, you could want to cut your losses and stop playing going forward. Is everything too hazy? If it's difficult to envision the future, you can think about splitting the difference and selling some of your investment today while maintaining the possibility of future gains. Regardless of your decision, you should have an action plan that represents your thoughts on the possible benefits and risks of cryptocurrencies. However, it's important to remember that some of the world's most astute investors will not touch cryptocurrencies and strongly advise you against doing the same. The conclusion is that the market for cryptocurrencies is strong now and offers a variety of profitable chances. People will undoubtedly test this spectacular but volatile new market. It is hard for a novice trader to avoid suffering any losses at all. Cutting your losses short in the beginning is the most obstacle. And as long as you follow the regulations, this is not really a problem. If you have the appropriate information, you'll realize that profitable cryptocurrency trading is not difficult to do. The main issue is to follow the rules and avoid acting impulsively or under the influence of strong emotions. Always keep in mind that winners also have occasional setbacks, but they also know how to recover quickly. Losers, however, never improve upon their errors. This is it for today's video. What do you think of our video? Tell us in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.